Welcome to Inside India. I'm JP Ong, and here are your headlines. Walmart-backed Indian payments company PhonePe is joining the long list of firms looking to list on the Indian market, which could see it IPO by the middle of next year. HSBC upgrades India to overweight despite foreign outflows, citing the resilience of domestic investors. This makes India the bank's third largest overweight after China and Hong Kong. And India is imposing import restrictions on silver and metal jewelry till March of 2026 amid a spike in imports from Thailand and other Southeast Asian countries. Good morning and happy Thursday. We start off the day once again by looking at how broader Asian markets are trending this Thursday morning, that is. And if we start off with North Asian markets, and you're seeing it's a bit mixed to the upside for the most part, with the greater Chinese markets looking a bit stable right now. Gains, though, a bit muted and a bit sluggish, actually. The Nikkei 225 just up by about 0.1%, while we're seeing the Shenzhen bourse outperforming its counterpart out in Hong Kong. The Hang Seng Index trying to steady itself after signs of profit taking earlier today. The South Korean Kospi also swinging between gains and losses, flat to the upside right now for the Seoul benchmark. We take a look at emerging Southeast Asia at the moment, and we are seeing that markets there also looking a bit more sluggish, actually. The Straits Times Index coming off of recent days of gains, they're down by about 0.25%. Meanwhile, the Jakarta Composite opening with a 0.5% intraday decline. The Thai set today opening with a gain of about 0.2%, the only one that's actually standing out with any signs of staying afloat so far in this region. And Indian markets are also set to come online in about 45 minutes. And here's what Gift Nifty futures are now trying to tell us, at least, with regards to the open in about 44 minutes now. And we are seeing that it is once again foreshadowing slight gains. But keep in mind, it's been doing that for the last couple of days. But nevertheless, the Nifty 50 is still on a 4-day losing streak and also fell by about 0.5% on the midweek close. The Indian rupee also looking a bit firmer today, but still close to record lows, actually. And again, weakest on record right now for the Indian rupee. It's firmed to about 88.75 in today's session. And HSBC, though, has upgraded Indian equities to overweight, even as foreign investors have been ditching the market over the past year. This making India, that is, an underperformer across Asia. HSBC says the Indian market now looks attractive compared to more crowded trades in Korea and Taiwan. The bank is citing a resilient domestic market, supportive government policy, and limited impact from U.S. tariffs. It's projecting a 15% upside to Indian equities for 2026, with India now its third largest position after China and Hong Kong. Meanwhile, Indian fintech firm PhonePe has filed for an IPO, and reports say the company is aiming for a mid-2026 listing. Early investors such as Walmart, Microsoft, and Tiger Global are expected to offload some holdings as part of the offer. PhonePe is India's top payment platform, with an estimated 45% market share by payment volume. In a 2023 private capital raise, PhonePe was valued at around $12 billion. The company reported a loss of around 19 billion rupees, though, last year. And the U.S.-listed digital infrastructure company Equinix has just launched its first data center in Chennai, Tamil Nadu. Expanding its footprint in India from the 3 existing centers in Mumbai, the company is investing $69 million into the first phase. And they plan to expand capacity as they continue to cater to local and international customers' cloud needs. Equinix says the company is AI-ready to help boost India's artificial intelligence competitiveness. And Manoj Paul is the managing director of Equinix India, joining us today from India right now to talk to us about how this momentous event that is for the company and for India's data center industry. Manoj, thank you so much for joining us today. As you mentioned, this is not your first time in India. You do have existing centers out in Mumbai, but this is the first AI-ready data center, actually. How does this support or synergize with Equinix's own operations out in Mumbai? And what does this mean for the company's own presence in India right now?
Yeah, thank you for having me on the show. Well, as you know, Equinix is a global platform with 270 data centers in 76 markets and 37 countries. So we entered into India in 2021 with the acquisition of GPX, and now we have an ecosystem of cloud, carriers, content, and enterprises in Mumbai. And with this new data center in Chennai, we have expanded into a new metro, because that's what our customers have been asking us, first India and now in Chennai. This is an AI-ready data center. That means that we would be able to support AI requirements of our customer. We have partners across the globe who are supporting us AI deployment for our customers around the globe, and we would be able to support requirements of our customers in Chennai. But more importantly, being a cable landing station plus interconnected to the Mumbai ecosystem, our enterprise customers would really see a lot of value in connecting to the Equinix platform and leveraging the ecosystem that we have not only in India but across the globe.
Manoj, I'm curious as to why Chennai was phase 2 for Equinix, if I can call it that. What made Chennai more attractive to set up this AI data center, ready data center, as compared to other parts in the huge country?
That's a very good question, because we have around 10,000 plus customers, and all our plans, both for product enhancements and rollout, depends on customer inputs. So we have been closely listening to our customers' requirement, and they said that we need to be in India. So we got into India in 2021, and the second location that they wanted us to be there was Chennai. And it's quite obvious that Chennai and Mumbai both have cable landing stations, so easy connectivity for our customers from India to other parts of the world. And if you say for an organization, Mumbai caters to central and western India and northern India, and Chennai makes our customers closer to their customers in the southern India. Plus the government policies, both in Maharashtra as well as in Chennai, are very, very favorable. We had very good run in Chennai as far as our development of the data center is concerned, with great support from the government. And it serves both our customers' requirement, and it has facilitated us in building this wonderful data center and launch it on 19th of September.
And Manoj, who are some of your key clients right now at Equinix, especially this new data center out in Chennai?
Well, globally and even more so in India, we have a wide array of customers. The enterprise make the largest part of our customer base. But at the same time, we have cloud service providers who are deploying their cloud on-ramp or the network node in our data centers. In Mumbai, we have all the large cloud service providers network node where they connect with their end customers in our data center. We have the OTT service providers, the CDN players, the internet exchanges, and of course, banking and finance customers and other enterprise customers are our key focus areas in Mumbai, and we expect that the same thing getting replicated in Chennai also. Many of our customers globally are with us across all the three regions, Americas, Europe, and Asia. 60% of our revenue comes from such customers. They are keen to expand with us in India, both in Mumbai, and now many of them would be expanding into Chennai with us.
And I'm curious, I know that you only opened up the Chennai facility, but I wonder how much capacity it's operating at right now and how much more space you have to take on future clients. Basically, how busy is it right now and how much space do you have to accommodate future growth as it stands?
Well, we opened up the data center with 800 cabinets, and the total capacity of the Chennai data center is 4,260 cabinets, so around 5 times more. So the next phases are much bigger than what we have open now. So we do have good amount of upcoming phases where we can support large footprint customers and also 1 or 2 hyperscalers within the same campus.
So Manoj, when we talk about data centers, the reason it's garnered so much excitement is because it's a building block or a foundation for any country or any sector's attempt to foray deeper and more effectively into artificial intelligence. What role do these data center investments that we're seeing in India play towards India's own attempts or their own initiatives to try and make more of the potential of developing technologies like artificial intelligence and others?
Well, Indian government is very keen to make India as the AI hub, and the AI mission is been used to promote AI development within the country. There's an outlay of $1 billion to support AI developers and to democratize availability of AI resources to developers and service providers. To that extent, data centers play a critical role, both for the digital economy as more so for AI. And we believe that the growing data center infrastructure within the country is going to enable AI deployment and AI usage within the country. At present, any which way, we have one of the largest AI users for ChatGPT, the second largest user for ChatGPT. We are seeing huge adoption of AI, and we believe that data centers like ours will enable this growth further.
Now, Manoj, there's some people point out that India might be a little bit behind or late to the game with regards to artificial intelligence, despite the massive amount of tech talent that's there. And some actually who have been on the show have actually said that right now India needs to focus on making sure the foundations are there, such as data centers, such as large language models, before they can actually realize this full capacity. Again, how important is it going to be, and how long do you think it's going to take for India to get these foundational building blocks and these foundational blocks right before we can see it perhaps realize any potential with regards to going into these new technologies like AI?
Well, we are in touch with our customers and with our partners, and we do see a lot of work happening on those fronts. There are several developers who are building applications based on the large language models of other AI players. But at the same time, the government is keen on developing India's own LLM. And we believe that in due course in time, we would have the right platforms available, not only to support AI in India, but also maybe provide AI services to the world.
Manoj, I have to ask you, whenever we talk about data centers, especially AI data-ready centers, everybody wants to know what's inside, what's under the hood. Can you talk to us about where Equinix might be sourcing their chips right now to power and enable these very, very advanced data centers?
Well, first and foremost, I'd like to explain that when an AI platform gets deployed in our data center, it gets deployed by our customers. So the enterprises are going to bring their own AI chipsets and deploy it in our data centers. We do have partnerships with NVIDIA, with Dell, and other players and Grok to support our customers in their AI deployment. But the customers get their chipsets. As far as our internal requirement is concerned, we have partnerships and we are sourcing it from different agencies across the globe. But the biggest deployment would be by our customers in our data centers.
Manoj, whenever we talk about data centers as well, we can't ignore the possible environmental footprint. And many do worry that these very resource-hungry data centers might actually play a part in creating questions with regards to resource management. We've seen some of these reports about data centers in the United States really putting a strain on water supplies in those areas. What is Equinix doing to make sure that the resources management at their data centers in India are managed in an efficient way, and also that strains on possible water resources and power resources on broader communities are actually managed?
Well, worldwide, we are very, very conscious about managing our water resources, and we are taking broad measures in measuring it first and then ensuring that we reduce consumption of water in our data centers. Here in India, we use air-cooled chillers, so we don't consume water. For power, we are very conscious in ensuring that we have renewable power. I would like to mention here that we are investing in building up solar and wind power farms in India, which should be live in the next few months, which will supply around 32 megawatt of power for our Mumbai data center. On similar lines, we'll do it for Chennai also. But at the same time, we're also taking measures to reduce power consumption within our data centers. We are deploying new technologies for efficient cooling, hot aisle containment to ensure that the cooling is efficient inside the data center. And also we are working with our customers and partners to promote ASHRAE's A1A standard so that we can achieve reduction in power consumption within our data centers and benefit our customers, and also reduce the load that we put on the grids.
And Manoj, I'm just curious, because liquid cooling is one of those things that was highlighted actually with regards to helping mitigate water consumption to try and cool down these data centers. How much of your data centers are actually employing liquid cooling solutions, and how much of an impact has that made in reducing water demand or water consumption at your data centers now?
Well, globally, we are working with many of our customers and are deploying liquid cooling in our data centers. And the consumption tests and all that, the reduction in consumption of power get to know in sometime soon, but we expect that there will be a significant reduction in power consumption because of liquid cooling. And we have our partners who are working with us. In India also, in due course of time, we'll start deploying liquid cooling as and when our customers require that. And we should be able to see substantial saving in power consumption with the deployment of liquid cooling.
All right, the very momentous thing, momentous investments, not just for Equinix, but for the data center sector and tech sector out in India. We'd like to thank Manoj Paul, the managing director from Equinix India, for joining us and telling us more about this momentous investment that they've made in Chennai with their second AI data center that is now AI ready as well. A quick check on the Forex space before we go, and looking at how majors right now are trading. We're seeing the dollar index just firming up just a little bit so far today's session, or softening. The rupee, one of the standout weak laggards in today's session at 16,750, while a bit firmer for the yen and the yuan so far. The rupee also trading at 88.69 against the greenback. We'll be right back with Inside India. Don't go away. Welcome back. You're watching Inside India, and here's some of the stories we're keeping tabs on outside of India. President Trump is expected to meet the Prime Minister of Pakistan, Shehbaz Sharif, today. According to a Trump official, the Thursday meeting comes after Trump met leaders from the Arab and Muslim world on the sidelines of the UN General Assembly in New York earlier this week. Pakistan has a trade deal with the United States and faces a 19% tariff rate compared to about 50% on India. An Indian court has ruled that there's no merit in a legal challenge by social media platform X. X said that India's content removal mechanism was equal to censorship and unconstitutional. But the court said that the platform had a duty to be accountable and must follow local laws. X could still appeal the ruling, including at the Supreme Court of India. And Thai Prime Minister Anutin Chanvirakul says he plans to dissolve parliament by the end of January and hold a general election next March or April. Anutin won a parliamentary vote earlier this month to become the country's latest leader, the third in just 2 years. The political uncertainty and fiscal concerns prompting Fitch Ratings to downgrade its outlook on Thailand to negative and affirming its credit rating to BBB+, with Fitch follows Moody's rating in downgrading the country's own credit outlook. U.S. Trade Representative Jameson Greer is meeting his counterparts in Southeast Asia so far in the last couple of days. In fact, it's the first time we've actually seen one of the senior U.S. economic officials are actually meeting Southeast Asian counterparts with regards to trade talks and tariffs on this side of the world. He's meeting the economic ministers of most of the major ASEAN countries, actually, and there are still efforts to try and finalize these trade deals, despite the fact that many of these tariffs have now averaged between 19 to 20%. There is a hint that perhaps trade concessions and trade agreements can further be improved to mitigate the economic impact on a lot of the export-reliant nations in Southeast Asia. There is an expectation from S&P, actually, that the tariffs itself might actually cause average growth in Southeast Asia to decline by about 0.4 of a percentage point to just about 4.5%. Speaking to some of his counterparts, Greer did say that the U.S. is open to trade, but says that it still has to be balanced and reciprocal. Here's more from the U.S. Trade Representative.
ASEAN is an important and consequential partner for the United States. Our combined population is over 1 billion. And as you mentioned, the total trade in goods and services is nearly $500 billion. And actually, if you look at our numbers, I think it's higher than $500 billion. You mentioned there's a 16% increase in ASEAN's exports to the United States. We, of course, welcome trade. We hope, however, that it is balanced and reciprocal.
And this reciprocity and balanced trade he's hinting at also are the major significant trade deficits the United States carries with many of these Southeast Asian nations, which the U.S. wants to rectify, with many of these countries also offering to increase their purchase of U.S. goods, primarily in the areas of agriculture and in energy. And we'll see if this actually yields any more fruitful discussions or perhaps improved trade terms for many of these countries facing most of these higher tariffs from the world's largest economy. Oil markets rose overnight after a surprise drop in the United States. Inventories led to renewed hopes over increasing demand. One aspect of energy demand that is being discussed more and more is the rising need to power data centers as demand for AI compute continues to skyrocket. U.S. Energy Secretary Chris Wright spoke to our U.S. colleagues about this need and his interpretation of the potential impact on the climate from this energy push.
So it is a balance, but ultimately AI done correctly, and that's what our whole thing, bring common sense, bring data. We're not this crazy alarmist band, but we can deliver AI and stop the rise in electricity prices. It takes some time because we've been digging a hole, make it very hard to produce firm capacity. Let me give you one example. Google signed a deal with Georgia Power and Light, biggest utility in Georgia, to build a huge data center there. And with the way they're going to fund it, Georgia Power and Light locked in their rates for 3 years, no increases. The ultimate impact of AI should be able to make our grid more secure and actually lower the average delivery cost.
So one of the things that people critique in the AI space is they say, look, all of these data centers and tech guys are saying, if we're going to build this, you, the energy companies, are going to have to, provide 99.999% uptime, meaning that we get prioritized energy relative to everybody else. And, there's this question, the hurricane happens, something else happens. Who is going to get the energy first?
Oh, consumers will always get the energy first. But how you get all those nines for the data centers is backup generators. Right now, there's backup generators all over the country, and silly EPA rules prevent us from using those backup generators. The electricity grid, people keep saying we need more electrons in the grid. That's not how electricity works. The only time we have a shortage of electrons is at peak demand time. We're going to, again, bring some common sense. So let's turn on all the backup generators that are sitting there at data centers today and at other critical facilities and turn them on when we get near peak demand to keep our grid robust. Common sense will help us deliver more data center, more electricity, and lower the cost. But 4 years of careening down the wrong road is going to take some time to reverse.
Has the endangerment finding on CO2 that sort of it set back utilities, it set back a lot of different industries, and it was based on the idea that you could say that CO2 is pollution because down the road you'd have increased weather events. You just said that there has been no linkage between the two. Is the endangerment finding, number one, it was preposterous when it started and an overreach, but it's still not gone. Is it in the courts?
Well, the EPA is working on a rule, and a decision will come out, and if they decide to remove the endangerment finding, which I personally believe the data overwhelmingly supports, get rid of the endangerment finding. Talking about extreme weather, deaths from extreme weather on a 100-year plunge. It's never been a safer time to be alive from extreme weather. So then it'll be challenged in the
Cold's a lot
courts.
worse than hot, too, for what kills people.
5 times more people die from the cold than die from the heat.
Well, it's causing that, too. The global warming causes the coldness. But go ahead.
Everything in weather is climate change.
Hot, dry, warm, wet year.
But yeah, it'll be litigated, of course. But that's exactly what we want, is discussing these energy climate trade-offs in a public setting. But yes, it enabled the Clean Power Plan, which started the rise in electricity prices that has everyone angry today.
Right. Meanwhile, there's plastic building up on beaches in Africa that have never been seen by humans, and there's 50 yards of disgusting plastic and particulate pollution and chemical waste and nuclear waste, and there's not enough fish. There's so many things. You could be such a great environmentalist if you knew what you were talking about.
The funny thing is, I predict in a few years, President Trump will win the Climate Hero Award because his policies, which is pro-natural gas and pro-nuclear, those are the only 2 needle movers we have today to reduce greenhouse gas emissions. He's not doing it for that reason. You're right. That's nowhere near our biggest issue.
And as that happens, the United States is also potentially facing a government shutdown next week, with federal funding scheduled to run out on September 30th. NBC's Ryan Nobles files this update from Washington.
Unless something changes pretty dramatically over the next couple of days, it appears as though Congress is barreling toward a government shutdown. House and Senate leaders in both the Republican and Democratic Party can't come to an agreement to keep the government open, and the funding is scheduled to run out on September 30th. So far, Republicans have on the table what is described as a clean continuing resolution that would fund the government at current funding levels through the next 7 weeks, basically right before Thanksgiving. But Democrats aren't happy with that. They believe that Republicans have not done enough to come to the table and negotiate some things that they have real concerns about, particularly health care. They would like to see an expansion of subsidies connected to the Affordable Care Act, also known as Obamacare. They're also asking for Republicans to claw back some of the cuts that they made to Medicaid during the negotiations around the big, beautiful bill. So far, that's something Republicans just aren't interested in. And initially, Democratic leaders were going to meet with President Trump to hash this out. But President Trump canceled that meeting after the Republican leaders in Congress told them that that would not be a productive exercise. So what does that mean? It means that no one's talking, and we're getting closer and closer to that September 30th deadline. Adding to all of that is that Congress isn't even scheduled to be in session until after the deadline passes. All of those things combined mean that a shutdown has become a real possibility. Ryan Nobles, NBC News, Washington.
And let's take a quick check on U.S. futures before we take another break. We are looking at at Wall Street, perhaps preparing itself for a 12-point change right now, with fair value gains of about less than a point right now for the S&P 500. The Nasdaq, though, also looking at an implied open of about 0.2% later on. We'll be back in about 2 minutes. You're watching Inside India. We are counting down to the market open in India, which is in about 15 minutes, and the final check of where GIFT Nifty futures are pointing the way. And so far, they are once again showing signs that we might see a handful of points added to the board as compared to yesterday's close. But keep in mind that the Nifty 50 hasn't been looking that nifty the last couple of days. They've been on a 4-day losing streak and also fell by about 0.5% at the midweek close. The Indian rupee now looking a little bit firmer, but again has been quite weak throughout the month of September, and did test some of its lowest levels on record, actually, just a couple of days. 88.65 is where it sits against the US dollar, but no one's going to call them flexing or strong given the recent trajectory for the local currency. India's government has placed some import restrictions on silver and other metal jewelry after a recent surge in supply from Thailand that raised concerns. India does not consider Thailand a silver producer, and yet 40 metric tons of the precious metal made its way to India recently in the form of jewelry. Officials say this is a possible attempt to evade payable duties under the ASEAN-India trade agreement. Silver imports will be restricted until March of 2026. Also, a look at gold prices and where the safe haven precious metal is going. We are coming off of a time when they've hit yet another record high earlier this week. Currently, the precious metal just stabilizing about $3,736 per troy ounce. And again, just looking quite steady despite some of the uncertainty we've seen hitting the markets in recent times. India is looking to increase energy trade with the United States as well, with Commerce Minister Piyush Goyal making those comments at the U.S.-India Strategic Partnership Forum in New York.
India is a big player in the energy field, as Pankaj has mentioned. They are big importers of energy from across the world, including from the US. We expect to increase our trade with the US on energy products in the years to come.
Minister Goyal is saying that India's energy needs are high, and he expects U.S. products to be highly involved in its energy mix, particularly in small modular reactors. He said both countries would continue to work together on nuclear energy in the coming years. It comes as the U.S. has criticized New Delhi for continuing to buy Russian oil, using it as a pressure point in trade talks, saying it should raise U.S. energy purchases instead. Meanwhile, India potentially is striking oil to meet its growing demands. New Delhi is making exploratory efforts into the Andaman-Nicobar Basin and have acquired more than 8,000 line kilometers of 2D seismic data. Latest studies estimate that the basin holds roughly 371 million metric tons of oil-equivalent hydrocarbon resources. Pratik Pandey is the head of APAC Oil and Gas Research at Rystad Energy to talk to us about this momentous discovery. And if it is momentous indeed, Pratik, thank you for joining us today. This has made a bit of news, actually, or stirred a little bit of interest, actually, not just in India, but across the oil and gas space right now. What are the potential for these discoveries in terms of oil deposits and reserves based on what you've been getting from and the updates you've been getting regarding this particular potential discovery, that is?
Thanks, JP. Great to be here. And a great point to start with, I believe, that what is the ultimate potential that we see from the Andaman Basin? And before we get to the numbers straightforward, the point is, what is the strategic significance of these reserves? One is the location of Andaman Sea. It is right next to the very busy trade route as well. And then is the energy factor that is associated with the Andaman Basin. This potential currently is only based on the seismic surveys. So there is no big discoveries that have happened. And it is still an untapped potential, which is being quoted at about 307 million metric tons of oil equivalent. To just simplify it a bit, this is significant enough to double India's current domestic production. So it is definitely an economic and political priority for the government, and they have done significant efforts to get investors and do more drilling in this area so that these reserves can be pushed out, and there is progress on the production part as well.
Okay, I think it's important to try to figure out how reliable these estimates are and how much is actually proven, because if you recall, a few years ago, there was this massive, exciting discovery of lithium actually in Jammu Kashmir in India that some are now questioning right now. It could be significantly lower. Are there similar concerns or similar steps that need to be taken to make sure that resources are indeed a closer knot to the potential that's being indicated, similar to what we saw there. Is this a similar case in oil and gas as well?
It's a very similar scenario. You mentioned a great example, and in fact, this is a case we always talk about in the global oil and gas, that when we look at the initial surveys, the promise could be quite high, and the reserve size looks quite optimistic. But even if a fraction of these is something that is ultimately found out, that could be significant as well for India. And what also supports the potential is the same basin also connects from Myanmar, Indonesia, Thailand, and we have already seen a few big discoveries in Indonesia and Myanmar in the same basin. So there are past examples of success in the Andaman Basin, and that is what is also the reason behind Indian government pushing for more activities in the Andaman Sea.
Now, so you've pointed out something that's key to my next question here, because the Andaman area itself, or the Andaman Islands, are at this part of the Bay of Bengal where you're seeing overlaps between Myanmar, Indonesia, Thailand as well, and you've seen in other parts of the world that sometimes there are points of contentions and possible disputes there. How is India and its neighbors perhaps managing potential disputes over these particular resources, or is it pretty clear cut that, hey, whatever's in your economic zone of interest is yours, and whatever's in mine as well?
Yeah, no, that's a great point, and I think this is specifically significant in the Asian region. There are a number of basins which are interconnected and are in the overlapping areas. We have already seen some joint developments between Malaysia and Thailand in the past. But when we talk about Andaman Basin, these are pretty disconnected and there are well set boundaries, so that is unlikely to be the concern. Although something that we need to still keep in mind when we talk about these resources is also the time that it will take to commercialize these resources and produce the first barrel. Globally, what we have seen is it's a journey of about 10 years plus to get the first barrel out of the ground from the current stage of exploration and discovery and before these barrels are sold. So that's a significant time, and this could be as long as 15 to 20 years is something that we have seen in other countries. So, and that is the effort from the ministry to frame the policies and the bidding round and the licensing rounds in a way that this time can be as short as possible.
Now, and as you mentioned a while ago, before we get to the drilling, we also have to make sure that we know how much is under the sea. Here we go, under the sea. Are we getting ahead of ourselves here, Pratik, perhaps a little too fast? And based on your experience, what's next after the initial surveys before we can say with certainty, okay, there's this much oil under the sea in this particular area?
I would say that that's usually the approach that companies have. The process is that we will first run these seismic surveys. These seismic surveys, only when they show promises and big promises, is when the frontier areas are ultimately thought of investing. If this was not a big deposit from the seismic results, it is very unlikely that any companies would invest in Andaman Sea for a smaller success at this point, because there is no existing infrastructure, which is why the current hype is also about how big the size of seismic surveys hints, and that seems considerably big. I remember the petroleum minister compared it with Guyana, and it does seem to be of the same size. And I can say even before discovering...
So it's not overblown. It's not hyperbole when he's comparing it to what was discovered in Guyana.
I don't think so. And even before discovering the big field in Guyana, we had about 50 plus dry wells. So it's not a journey that there are seismics and we will straightforward have a big exploration success. It will be a period of efforts that will ultimately lead to the success. And I think that is what India is stepping towards.
Okay, exciting then. But let's say we get to the point where, okay, we can confidently drill for these. Do you think India can do it alone? Will there be cooperation between all these countries, or will a foreign technical partner from, say, Japan or the United States or somewhere else need to be brought in to try and make sure we can harness all of this oil that potentially could be there?
Good point, and I think at the start what India is willing to do is asking the NOCs or the state-owned players to lead the activities, which is what we see that ONGC and Oil India are already drilling a few exploration wells this year and next year. And on the parallel, there is an ongoing licensing round, which is where India is already inviting the foreign investors to bid for exploration acreage in the Andaman Sea. That is where India is possibly looking for partnerships on the technical, financial side, and the companies which are more expert in developing the frontier areas.
Okay, let's talk about the potential for this to help India with its energy security. You said it's quite significant. Now, there is one of the significant producers of oil in the world happens to be China, but they still are a net importer because of the sheer population, the sheer mass of the economy as well. India is no slouch, 1.4 billion people, growing very fast. Even with these discoveries, will it enough to make India energy sufficient, or will India continue to be a significant importer, even in the best case scenario?
No, we need to definitely talk about that point about how much is the effective impact on the energy imports for India. And again, this is where I'll bring up again the point about we are talking about the production from Andaman in the late 2030s. And even if there is a discovery. If there is a success, it is most likely going to be a gas discovery, which is what we have seen in Indonesia and Myanmar. India currently produces about 45-50% of its production domestically for gas. And that is likely to go down or at the same level over the next 10 years. By the time Andaman starts producing, it will most likely help India to continue having at least 50% of the production coming from the domestic sources, but the reliance on imports will still continue, most likely in the long run.
All right. And speaking of those imports, of course, the hot topic when it comes to Indian energy is the import of Russian oil. We did have an economist a few weeks ago who said actually that because of how far oil prices have declined and all the dynamics, that the discounts or the savings from Russian oil purchases, which matters to India's energy security, might be negligible. And you might be able to switch to similar crude such as that out in Dubai or Murban as well. Do you think that's a fair assessment, or do you agree with that assessment that maybe now the savings are negligible, and perhaps if India wanted to wean itself off it, it's easier now than it was, say, 2 or 3 years ago?
I would say, going by the actions from the Delhi and the government, it seems like the priority is economics over geopolitics, and that is likely to continue. And even if we see that the discounts are getting smaller on the Urals, and there is bigger focus on pushing India to import the crude from other areas or the other countries, it might be modified slightly, the current basket, but we don't see it going back to a point where it is much lower than what it is right now. And it's also the relations between India and Russia is far beyond just the trade on energy. It is much stronger, and we don't see it getting to a point where the Russian imports are going back to zero.
I see. Of course, this is also being seen as an opportunity for the United States to increase energy exports. This is something that the Commerce Minister also hinted at as he continues his tour in the United States. But there are other considerations. On one hand, the U.S. is kind of far, so transport costs is an issue, and U.S. crude oil itself. If we just use oil, for instance, it doesn't seem to be at a grade that is easily refined based on India's current facilities. Is it going to be feasible to import U.S. oil, and how difficult is it going to be just to switch to that particular source, if that is an option that the Commerce Minister has said is possible?
There are definitely talks that are ongoing right now on the potential to buy more oil and both LNG from U.S. But the biggest concern there is the time it takes for the shipment to reach India. Just an example, that LNG shipments from US can take about 30 days to reach India, whereas from Middle East, it's about 5 to 7 days. Even if we get it from Africa to India, this is about 10 to 15 days, much lesser than what
And how much is that transport cost, particularly? Do you have an idea of how much more expensive it is to transport these energy goods?
It definitely adds a bit of the cost because of the freight and the transport routes, but we have to also keep in mind that the US volumes are a bit at the lower cost on the LNG side specifically. On crude, yes, that is what makes it difficult as well, that the shipment cost will be much higher. So even if we see this happening, because of the technical feasibilities of the refinery and the shipment routes, it is going to be something which is small addition to the current imports, but not a significant change. Also because when we look at on the gas side or LNG, which is where there is possibly bigger scope for India to buy more LNG from US, there are a lot of long-term contracts that are already existing with Middle Eastern countries. So that also becomes an obstacle for Indian buyers to switch to US volumes at a faster pace.
So how long are these contracts that we're talking about? Basically giving us, and I'm asking this to give us an idea of when the switching might be able to happen feasibly.
Most of them are in the range of next 5 to 10 years at least. So it's not something that is going to be simplified in the next couple of years or so.
Wow, so it's going to take 5 to 10 years before we see potential shipments, and we'll have to wait for how much time. It'll be longer freight times as well coming in as well.
Before we see the big shift in the trade, I would say, yes, the minor additions can come from US, but it won't be a significant difference.
Understood. Okay, so a lot of things to consider there, and of course a lot of moving parts as India tries to continuously solve its energy security puzzle. Pratik Pandey, Rystad Energy's head of APAC and oil, thank you so much for joining us today and helping us to get a better picture of what that Andaman oil survey actually means for India in the long term, but we have to make sure that it is indeed under that sea. Appreciate the time, sir. Well, the G7 countries and the EU are said to be weighing price floors for rare earths in a bid to counter China's dominance. This is according to a report from Reuters. China is the world's leading producer of rare earths and sent shockwaves through the global markets when it introduced export controls in response to American tariffs. Sources have told Reuters that the G7 is considering increasing regulation and foreign investment in critical minerals and may also introduce geographical restrictions that would limit sourcing from select countries. This as the U.S. government looks to expand its foothold in the rare earth space. Taking an equity stake in MP Materials earlier this year, our U.S. colleagues got a chance to speak to the CEO of MP Materials overnight and asked him about his unconventional deal and if the U.S. could wean itself off of rare earth imports. Here's what he thought.
I do want to distinguish MP because I think there's a lot of sort of noise in the media. But if we think about Intel or Lithium Americas that was rumored this morning, that those are scenarios where you had commitments from a past administration where the Trump administration has come in and said, wait a second, we have no strings attached commitments to companies. We think we should get a piece of the action.
They didn't have to do this in this case.
They didn't have to do this. Ours is really a different situation, which is we were executing well, there was a crisis, and the Department of War came and said, we want a true public-private partnership with you, MP, so let's do a deal. And so our deal is very different. And our deal, we can get into the politics, but there's actually a long tradition of public-private partnerships in times of national security crisis in the country. And so our deal is very different than sort of some of the other deals.
For the audience, they may not know. Explain what MP Materials is doing.
So we are a vertically integrated rare earth magnet producer. So we mine and refine materials in Mountain Pass, California. We send them to a factory in Fort Worth, Texas. And so we have the vertically integrated supply chain to truly solve the rare earth magnetics crisis that we have, which is critical for, essentially, it's the feedstock to the future of warfare and physical AI. So it's mission critical for our national security and our national security infrastructure and economic infrastructure.
And by the way, it's exactly what China used as leverage just a couple of months ago.
That's exactly it. When we went into Geneva, Becky, our economy, I don't think people fully appreciated the first trade talks in Geneva. We were on the verge of factory shutdowns across auto, aerospace. It was really, really close.
So how much can you produce? Is it enough to make up what we are getting supplied by China at this point?
So as part of our partnership with DOW, the goal is to accelerate everything that we've been doing to 10x our capacity, which will essentially solve the American imports as of today. Now, obviously, the industry is growing, but it'll take this issue off the table.
Yeah, how long will it take to get to that point, and how much do you produce today in terms of the demand here in the United States?
Yeah, so we're going to triple our existing factory, and we expect that to be online the tripling in 27, and then we're going to do another 7,000 tons, which is taking it to 10,000 tons, and that should be online in 28.
Okay. What is the average? What is the daily demand in the United States right now, or the annual demand?
Yeah, well, we import. It's a complex question because we import a little over 7,000 tons of actual rare earth magnets, but then there are about triple that in magnets in things that we import, like motors or actuators that are actually coming in as an import as part of a product.
Well, about 4 minutes into the trading session, markets in Mumbai have been trading now, and we'll bring you the early action when we come back in about 2 minutes. You're watching Inside India. Indian markets have been trading now for about 6 minutes, and we're looking at the Nifty 50 once again trying to find its footing after coming off of 4 straight days of losses. It's currently trading flat to the upside at 25,062 points, while the Indian rupee continues to try to find firmer ground and trying to flex just a little bit at 88.61. But there are concerns that it might test record lows once again over the coming days, which has been the overall trajectory for the local currency. Currently, the rupee, as mentioned, 88.61 against the greenback. A quick scan across the sectors in the Indian markets, and we are looking also at well, here you go. You've got most markets trying to at least stabilize themselves. Nifty auto shares or car makers in India actually in the red. Perhaps some profit taking after we got a pretty good bump up for these stocks earlier this week on the back of the GST reforms being enacted, and also signs of car sales picking up significantly out in India. Nifty finance, that is, and some of the banks also a bit sluggish in today's session, perhaps just needing a second cup of coffee to get out of bed. While we are seeing the likes, for instance, of the FMCG sector again up by about 0.4%. Perhaps something to do also with some of those GST reforms and a possible bump up or boost to overall consumption in this country of 1.4 billion people. We're watching shares of Glenmark Pharmaceuticals, the Indian company's Swiss arm, which has just clinched the license to sell a cancer drug by China's Jiangsu Hengrui Pharmaceuticals. It gives Glenmark exclusive rights to develop and commercialize the innovative antibody drug in most markets outside of Greater China and the United States. We take a look at Glenmark shares now up by about 0.5%, and Jiangsu Hengrui Pharma also trading about 3.7% in the green. Shares of Hindustan Copper also rising today after copper prices hit a 15-month high earlier this morning. This after Freeport-McMoRan declared a force majeure at its mining complex in Indonesia and slashed its production guidance for 2026. We're seeing Hindustan Copper shares also jumping by about 2.6%. And we turn our attention to Japan, with Toyota being well known for its cars, but it's taking a new big foray elsewhere, and it's just launched a new mini city. Lin joins us now with details. Lin, tell us more about this, because this sounds very ambitious.
And this is really the auto giant there laying out what it believes is the future of mobility as well as a way of life 5 years after it was first unveiled by Toyota's chairman Akio Toyoda. In this first phase, we expect only a few hundred people to be living in this village, most of them being Toyota workers as well as their employees. So the community itself is called Woven City, and it sits on the base of the Mount Fuji, of the very famous Mount Fuji. It was built on the land of a former car factory as well. In the initial phase, 47,000 square meters of land. That's equivalent to about 5 baseball fields. And Toyota has already entered into tie-ups with about 24 Japanese companies, both in terms of projects that they will look to test, but also in terms of facilities that will be provided to the village. So, for example, food company Nissan will be helping on that front in terms of food services. Daikin will be helping in terms of heating and cooling services as well. The goal for the company is to, as you would expect, collect the data as well as test technology in a pretty unencumbered way. So we're talking about level 4 autonomous vehicles. Other things include robot trash collection, autonomous delivery bots, and so on as well. The chairman has said in the past that he does not expect that this project is going to actually provide profit here, but really it's in line with Toyota's broader vision that, as it's been saying, it's no longer just a car maker that provides reliable and affordable vehicles, but that it wants to really show it has a stake in the future in terms of mobility and technology infrastructure, keeping in mind as well, JP, that they've been pretty slow when it comes to the EV transition.
Indeed, and well, very exciting and very ambitious push that is from Toyota with regards to the Woven City. We'll see what more it develops into in the future. But Lynn, thank you so much for that last update. One final check on Asian markets today, and we're seeing it's a bit steady so far this Thursday, that is. steadier than the day that I think it is today. It's a Thursday, and so far it is steady with the Kospi and the TAIEX both in the red. The tech-heavy indices so far just finding it a bit more shaky to go by, while the Hang Seng is looking quite decent today, up by 0.4%, and the Nifty now holding on to a 0.1% gain. That's all the time we have today on Inside India, but do keep watching CNBC because Axis Middle East is up next. Happy Thursday.